As Christmas time is here, Honest is here to give you that Christmas wish you want true. Can Honest be the next 10x stock just for you? Let's find out at Barry Charles right here, right now. Yes, welcome guys and gals back to the channel. Yes, in this we are going to talk about Honest, the company that went from bankruptcy potentially to the king of baby wipes. Yes, will this be the next Johnson & Johnson? Honest continues to outperform its peers, but will it continue going into 2025 as profitability is near and Honest stock price has soared, absolutely soared in the last few months? Are you too late to get on the bandwagon, or has the story just begun? Well, you're at the right place to find out, as Barry Charles gives you the education you need so you can become financially free. Yes, well, it's time to have an honest conversation with you. There might be harder times, but the truth will set you free in whether or not to buy the stock or not. But today, you have the opportunity of a lifetime, folks. This could be the potential to be the next Johnson & Johnson for you. It could be the buy of the century. Well, but all kidding aside, let's get to it. An honest stock analysis. What is the stock? If you stay right to the end, I will give you the intrinsic value of this company. Yes, I'll give you the intrinsic value of this company. If you stay right to the end of the video, yes, right there at the end, yes, you will get the answer you seek. Well, let's get to it. A stock analysis on Honest. Well, how are you doing out there today, folks? I hope it's all roses and no thorns for you today. We want you to have a great day, and we want you to be financially educated to the top of your knowledge. Well, welcome to the channel. Welcome to this episode as we talk about Honest. We're going to give you the deep dive into the stock analysis. We're going to look at return on invested capital. Have they got any at the moment? You will find out shortly. Net income. Have they got to profitability? Revenue. We're going to look at free cash flow. Do they have any? Everything in between on this episode here, just for you, the honest observer out there. I hope you like and subscribe to the channel so we can spread the love of finance to the world. Let's get to it. Honest stock analysis and intrinsic value right here, right now. And I will give you a base case, a bear case, optimal case, and absolutely pie in the sky theory to the end of time that Honest could be the company you should be buying for the long term. Potentially find out. Let's get to it. Honest stock analysis. Yes, folks, well, the current stock price is wavering at the moment, but we're going to say it's about $7.40 at the time of me recording this. 52-week range has gone from as low as $2.40. Congratulations if you are that person who brought that low. Congratulations, well done to you. And if you brought it $9, could it be despair for you? I'm sorry. Just kidding around, folks. $9 could potentially still be a bargain buy for the stock going forward. But yes, let's be completely honest. I feel like the fool out there. I have sold out Honest. I should not have sold out Honest. Let's be completely honest. But in saying that, I've had better performance this year. Honest has been outstanding, don't get me wrong. It's been a great one, but we've had better performance this year in the likes of Palantir and the likes. But doesn't mean I won't buy back in, because some of the other ones have gone to pie to the sky as a time to get back into Honest. Well, this is what this video is for, to hopefully give you some advice and give myself some advice to see if Honest is right for you. But if we look at earnings per share, it's still negative at the moment. There's a turnaround of positive coming into this month as they sort of get to break even. So there is a tide is turning, folks, but overall the earnings per share is still minus 0.66. So nothing to write home about there at the moment. As we look at, there is no P ratio because they're negative, and same no dividend. So yeah, you need a little bit of work to do there for you folks out there. what do I see as the something of interest here? The short interest. Well, I remember a year or so ago that this stock was like 10% short interest, if not higher. So they've totally turned it around to be 1.47 these days. Well, that shows you where this company is potentially heading, not financial advice. We look at the current market cap of 712 million. So just to compare it to a comparable company that's already been in the space for a long time, Johnson & Johnson is 346 billion. I'm telling you, this is a long way to go. If this company does get to somewhere even near this company, 10x, you can see this happening, folks. I'm telling you now, 10x can be there. And will it get there? We will see. That's why you're here, to find out. Yes, so can Johnson & Johnson be the next honest company? I see comparisons, but then the biggest thing for me that really is downfalling the stock at the moment is the revenue. It's increasing, don't get me wrong, it's doing well, but it's just doing standard revenue. It's not doing NVIDIA 100% sort of stuff. That is the thing Honest needs to get to. I don't expect Honest ever going 100%, but they need to get to 2030. At the moment, they're just not going high enough for my liking to really say this company's going to be absolute game changer. But yes, let's have a look at the annual revenue of 370 million, up from 344 last year. So see what I mean, only 26 million, so it's not a lot of money. But the net income is where the impressive thing is, and that's why the stock has gone from $2 to $8. Yes, folks, in 2023, it was $39.2 million loss. Now at around $4 million for 2024 positivity. Outstanding improvement from net income. Well done to Honest. Yeah, so that's where most of the excitement has been around the stock lately, of that big jump there. But let's have a look at the last couple of quarters to see what's happening with the revenue there and the net income, and see if it's really all roses. Well, it's been solid with the revenue. That's why I'm not super strong on the stock. 99.2 million, 93 million respectively the last couple of quarters. Up a little bit from 86.2 the quarter before. So they are increasing, but nothing dramatic. So but this is where the dramatic part is. September 2022 or 0.2. That's where the positivity has come in. And with this quarter being even better, jumping up, skyrocketing, this is where people are starting to get excited. If they can continue to go up with net income, then look out, this company could go well. But the revenue side is still my concern. They really need to push to get revenue growing more and more and more. Let's have a look at total assets of 209 million, up from 201 million last season. And this is where I'm excited. The total liabilities, 94 million in 2022, dropping to 78.5 million, and now to 75 million in 2024. Total liabilities going down. Top of the class there, mate. Outstanding. But this is where it all crashes and burns. Return on invested capital is negative at the moment, negative 0.3%. But on the last quarter, return on invested capital is 0.18 just. So there are some positives turning there, but it's not making anything like a NVIDIA or Palantir and the likes. They got a long way to go to get you to where you need to be. And also a shares outstanding, $100 million, folks. Yes, they continue to dilute you, up from 71 million 3 years ago. So they are killing you. And absolutely, so you got a third less of your, well, right now you lost about 30% of your share worth in that time. So they are diluting you big time there. Even though revenue's up, it needs to go up a lot more. It needs to go up to 20% every quarter. That's what you need from this company if you really want it to go to where you want it to go. Net income is improving, which is outstanding. But yes, it's just whether or not the growth is there. That's the question mark you have to have in yourself. Is the growth there for this company to be an uber stock in the future? To go to that 10x from here, to jump up to the Johnson levels. They need to do some work. Well, this is what you all came here for, folks, is the intrinsic value of this company. Yes, what is the intrinsic value of this beautiful, beautiful company we call honest. Yes. Well, I'm doing a grams calculator, just a simple calculation using the current share price, earnings per share, current bond yield with the expected growth rate that you can put on yourself. And it gives you the intrinsic value of the company right here, right now at this stage. This does not include return on invested capital, free cash flow, all that stuff. You've got to sort of add that up above what is in this calculation. Let's just give you a sweet calculation of the intrinsic value of this company, and then you can do some more research to decide if you think the stock is for you, not financial advice. Yes, well, we're going to look at a bear case, a base case, optimal case, and then a pie in the sky, stratospheric ending that honest goes to the moon. And to be honest, this could be even more to the moon than what I put, but this is pretty much the moon for these sort of stocks. Let's have a look at the bear case, which we are at currently, 7.4 and minus 0.66, with a growth rate of 5%. And then you're looking at retiring with minus 12.7% and minus $12.70. This stock should not buy now if you're looking at current metrics. But if you're looking at probably real what's happening right now at the bear case level, base case level, so the stock price is 7.4, earnings per share has just jumped to 0.2, expected growth rate of 10%, which is about where we're at the moment. The stock is still overvalued at $5.90, the intrinsic value. So yeah, that sounds about right, that the people are above what they actually value the stock. This is generally the case with a lot of stocks in the hype phase. But where to from here? Now, will they stay there for all the time? Then eventually you'll make money, but it's a long road. But this is where it gets exciting. Can they get to $1 earnings per share? 15% growth rate. This is right in the sort of getting to near pie in the sky theories. But if you think this is the case, $40 stock you buy every day of the week, not financial advice. And then if we go all the way up to optimal, everything's fine, everything's going great, we're going to go to $2 earnings per share at an expected growth rate of 20% a year. $101, folks. Yes, $101 you buy the stock. No. Not financial advice. But honest is potentially a stock for you out there to do more research on. That is a stock analysis here for Honest. I hope you enjoyed it. Remember to like and subscribe to the channel. And we will be back with plenty more videos like this for you. I think Honest is potentially a 10x banger. No guarantee on that. I think you could expect 10 to 15% is probably more likely where the growth is going to be. But if they can produce more revenue, that's where it is. So they get the revenue up, they can really drive their revenue, get more and more customer share, then look out, Johnson & Johnson, you've got someone on your hands potentially. Anyway, thank you for joining me, and I'll be back with another video soon.